In this video, I'll help answer the question, is Stride a buy, hold, or sell? I'll touch on 4 things. Number 1, I'll talk about how this company makes money. Number 2, we'll talk about the latest news, and I'll get into why the share price fell over 50%. Number 3, we'll look at the latest ratings in Tykr, and then number 4, I'll let you know what I plan on doing with this stock. And just so you know, if you want to see the ratings on Stride and other stocks in the market, you can join Tykr for free. All right, let's get to it. So how does Stride make money? Well, Stride is a SaaS business for the education industry. So they serve a lot of private schools, public schools, universities, really everything in between. They really help organize the full curriculum. I know if you're in a math class, English, history, whatever, they'll keep everything organized. Allows the teacher to kind of put everything up there on the platform, and then students can kind of walk through everything. Makes it super easy to learn online. Get this, they have 75% of the market. So they're one of the top players in this space. And if you have a child in school right now, there's a high probability they're probably using Stride. And get this, they also serve over 2,000 school districts in the US. Some of the schools include Wisconsin Virtual Academy, Texas Public Schools, and Chamberlain University, which is one of the largest nursing schools in the US. So when it comes to software for schools, they are one of the top players. All right, let's get to point 2, which is the latest news. So they had a solid earnings report. However, the share price fell 50%. So what happened here? Well, there's really 2 main things. Number 1, guidance. We'll talk about that. And number 2, a class action lawsuit. So let's touch on the first thing. So there's a lot of earnings reports that are turning sour right now because of guidance. Guidance is essentially what a CEO or one of the C-level executives is saying about what they believe will happen in the future. Not what did happen, but what they believe will happen. Now, a good leader should always report on the facts, which is what did happen. What happened last quarter? What are the numbers? For example, the revenues, the EPS, everything in between. They want to report on those. When it comes to guidance, and this is what I found, like with Tykr, we are not a public company, we're private, but I do earnings reports for our investors just to provide transparency. And I don't report guidance. Like, I'm not going to say, we believe our revenues are going to be this the next quarter, or we believe our profits will be this. I like to focus more on tangible things we're working on. We're going to work on this feature, we're working on this partnership, or stuff like that. But as soon as you start throwing out numbers or, saying anything along the lines of, what, last quarter was good, we don't think the next quarter will be as good. Well, in most cases, you're kind of shooting yourself in the foot. In large institutions, they're going to sell off. Well, right now, a lot of people believe the market is a bit overvalued. And sure, there's a lot of overpriced stocks, but in Tykr, we like to find those on sale stocks. But anyway, what large institutions are looking for right now is an excuse to sell off. So let me explain what I mean there. So they're going to hear like one word or something that's a little off in that earnings report when it comes to guidance, and they're going to sell off. They're going to sell the whole way, but they're going to sell a decent chunk of shares. What that does is it causes a lot of people to freak out, and then they're going to sell it further. And that's what a lot of value investors want. For example, a lot of institutions want that. They want to kind of like, send the first domino over and then see the rest topple over from other people. Well, that behavior is on repeat right now. A lot of guidance is causing these massive sell-offs. So don't freak out. As a value investor, this is what you're looking for. We want that share price to fall. The financials are great and there's no legal issues. It can be a great opportunity to buy more. So anyway, with Stride, yes, there was guidance that they think their earnings are not going to be as big into the future. All right, so that caused the sell-off. Well, this moves on to the point 2 here, the legal issues. I had to do a little homework here and what's going on here. So there's really 3 things to highlight. Number 1 is ghost students, essentially inflating enrollment numbers. I don't know what's going on there or what leadership is thinking or who put that out. It's just, well, people are going to find out the truth eventually. Like, don't inflate numbers. Like, that rarely ever works out. Number 2 is ignoring compliance requirements, especially around background checks and licenses. Again, I don't know what the deal is there. Like, why would you play with fire? Like, in the world of licenses, especially around careers, what are you doing? Like, don't mess with that. So those are 2 strikes right there against Stride. The third one is, it looks like some challenges around the technology. I'm building a tech company. I've got a great team, but there will be bugs. Like, we know this. It's not going to be the perfect software, and we try to work through them. And there's a lot of other software that we use, and every once in a while we find a bug, but like, come on, like, don't hold it against a company. You got to give a little grace here. Like, of course, report it, let them know that, hey, we'd like to see this resolved, and then hopefully resolve it sooner than later. It's kind of how it works is when you're building software. It's, again, never perfect. So I don't know the extent of these issues. I wasn't one of the users, but I would not hold that one, the 0.3 against them. It's really the first two, the ghost enrollments and the licenses. I could see why there's a class action lawsuit. Now, in this case, hopefully leadership gets to keep their job and they right the ship, but board of directors, they get the final say in this situation. So we'll see how it plays out. I'll let you know after the Tykr ratings what I would do if I were holding this stock. We'll get to that in a second, but now let's move on to point 3, which is let's take a look at Tykr. So in Tykr, we're going to walk through the 7. Of course, you can go to tykr.com, go to education, and then calculations, and you can see the open source calculations on our platform. We just want to provide transparency for our customers. All right, so the first thing we want to look at is the summary. Stocks in Tykr are either on sale, watch, or overpriced. That's green, gray, or red. And only 15% of stocks make it to on sale. Well, Stride is on sale. That is a good sign. Next up, we've got the score. You want to get over 50 on the score. This is overall financial strength. Stride's financials are really strong. 89, that is outstanding. Next up, we've got the margin of safety. You want to be over 50%. They're at 80%. That is a good sign. That shows a lot of upside potential. And then in the middle, we got the 4M. If you can get over 80, that's really hard to do. So let's take a look. If you guys haven't used this tool already, it takes about a minute or so to walk through the 4M experience, but it really breaks down the math for you, the meaning, that's how the business makes money, the moat, how it compares to other businesses in the same sector and industry, and then the management. That's the track record of the CEO. Doing homework on all 4 could take you hours, if not days of research. We, using OpenAI, we reduce it down to seconds. You don't even have to do a 4M. You can literally go here, see the average, and call it good. All right, so we're actually 4 for 4 so far. Let's keep going. Next up, 5-year returns. We know that past performance does not guarantee future results. However, we like a business that consistently beats the market, not just 1 year, but 5 years. And the number to remember is S&P 500 typically returns about 80% over 5 years, somewhere around there. We can see this stock, Stride, is at 176. That is outstanding. We're actually almost done. Financials, EPS, this is the number 1 most important line on the financial statements. This is essentially the profits, and we can see the last 2 quarters are looking good. We went 3 quarters in a row where the profits are increasing, but the last 2, look at that. It was at $1.19 and then up to $1.59. That is really a large jump. Still, after the earnings report, the share price tanked, but of course we know that was poor guidance and of course the class action lawsuit. Let's keep going. One more. Earnings calendar, we can see they beat their estimate. We won 3 quarters in a row. This case, we only have 2. So 23% on the last, and right before that is 25%. Those are some pretty solid numbers, but overall, that's the 7. I think we're gonna get a 5 out of 7, that's the minimum we wanna see. That's actually pretty hard to get to. Let's go to, there we go, 5 out of 7. Looking really good. I want to show you one more thing here, and then I'll let you know what I would plan on doing with the stock. If you go to the left navigation here, go to assets, then stocks, and let's just for kicks, let's throw on a filter here on the 7 of 5 to 7 and see what this number turns into. Right now, there's about 57,000 stocks in Tykr. We're going to see what this number turns into. 5 out of 7. 57 turns into 1,000. Shows you that's actually really hard to get to. Let's make a few small changes. Let's change that to 6 out of 7. That's 257. That's ridiculous. It's very hard to get to. And then 7 out of 7. If you guys like, you can play with this all day. Yeah, 20. I would say around 20. 28 right now. That's pretty good. So that's a little cheat code for you if you want to save time and find some really strong stocks. All right, so leading up to what am I going to do with this stock, or what would I do with this stock? So I know a lot of investors right now that are in LRN are kind of freaking out. Like, what do I do in this case? Well, to kind of share a story with you that happened a few years ago, you probably remember when Zuckerberg was in court for some of the data privacy issues around Meta or Facebook. And what typically happens when you have a legal issue it's really only a quarter or two. It can be a little longer in some cases, but it's a quarter or two. But as soon as you have like a really strong earnings report, for example, the EPS is increasing and they beat their earnings estimate, it's like the market has amnesia. It totally forgets about the legal issues and the share price takes off again. This happens all the time. So don't freak out if you're holding Stride. I would do this. I don't hold Stride in my portfolio. It is on my watch list. It's probably like a top 20, top 25 stock in my watch list. I'm going to keep an eye on it. I want to see what happens at the next earnings report because this share price was like down 50, I think close to 60%. I mean, we have legal issues, so I'm not saying, hey, stockpile into this thing. But if the next earnings report is outstanding and the share price is still down, just saying, it might be a stockpiling opportunity. So just take that into consideration. All right, I hope you enjoyed this review. Of course, if you want to see the rating on Stride and other stocks in the market, you can join Tykr for free. And if you stayed to the end, thank you. Please like, subscribe, and share with a friend. Referrals from friends are one of the best ways to build a business. And of course, don't buy and sell stocks based solely on what you hear. Only buy and sell stocks that align with your own personal financial goals. Thanks for checking out this video. We'll see you in the next one. Bye for now.